ASEAN Economic Research of Bank of America. Hi, Rahul. Thank you so much for joining us at ET Now. Firstly, help us with your expectation regarding the CPI print and what will drive the CPI lower for FY26.
Sure. Good morning. So I think, we are broadly in line with where the market is expecting inflation to be around 3% on headline, with core inflation likely to outstrip it by about 4.2% as well. I think the core message for us from the inflation trends in the recent months has been that, food inflation, which was really the problem in the last 3 years, appears to have finally been sort of, addressed. With supply augmentation being quite visible, buffer stocks being quite good, and then perishable prices, particularly vegetables, not really going through the typical seasonal pickup that we see, in the summer months. And so all of this is sort of, coming together to sort of put a dampener on inflation trends, which is a very welcome news. And it does kind of provide RBI a lot of leeway as far as, their policy conduct is concerned, and also probably helps consumer spending at the margin. As we just put out this morning, we think that consumer spending will be a big beneficiary of low inflation trends, which are likely to stay with us for the next 3 to 6 months as well.
Okay, Rahul, appreciate that view. Also help us understand your take of the RBI's reduction of inflation for overall FY26, because in the April meet they had pegged this to be at 4%. In their last hearing now, it's come down to 3.7%. That's the estimate. What are you making of this reduction from the RBI for the overall FY26 CPI print?
Yeah, I mean, this is broadly in line with what we are also expecting. I mean, we had reduced our inflation forecast just a month ago, to 3.8%. To be honest, we are tracking it a little bit lower at this point, but you can never rule out some seasonal pickup in food prices later on, right? I mean, that's just the nature of the beast. But in the way, I think the core message, that we took away was that inflation is essentially seen as quite under control in the current environment. Remember, like, we have not even seen any material pass through of lower energy prices into our retail fuel prices, right? So, there is a fair amount of wiggle room, that both the government and the RBI enjoys as far as inflation management for this year is concerned. And so, this does allow the central bank to really focus on reviving growth, which seems to be the number one priority as things stand as far as policy conduct is concerned.
All right, along with that, Rahul, we are seeing good moves rather on the commodity side as well, because given the fact that just yesterday, great move on crude oil prices, even gold is seen to be inching higher. What levels of crude oil and gold prices are you factoring in for your CPI projections?
Yeah, so we took an average estimate of around $75 a barrel, which is obviously a lot higher than where it is. But I think we need to sort of distinguish between what is the actual price of oil and what is the, the pass through, that sort of goes on. Because what we have seen in the past cycles in the last few years is that the government does not necessarily pass it on as far as, the benefit of lower oil or, the problems of higher oil prices are concerned. So we think that, we are in a very stable price regime as far as gasoline and diesel prices are concerned, with a bias for it to move lower if you see lower oil prices persist. On gold, we are expecting gold prices to move up. Our in-house forecasts are for gold to be around $4,000, for per ounce, price by the end of this year, which is in line with a view also that the dollar will probably weaken. But it is something which is a bit of a double-edged sword as far as India is concerned, right? Because Indian households typically tend to have very high levels of gold as well. But then, it also is something that does influence inflation at the margin.
Okay. And while we're talking about some factors that could affect CPI projections, how much do you believe the impact of monsoon distribution impact the supply, and what is going to be the food inflation prediction from your end this time around?
Yeah, so I think at this juncture, that's the biggest source of uncertainty, like it always tends to be in the early parts of any monsoon cycle. what we are factoring in, looking at the IMD projections, is that availability of water, which probably is the most important factor from a medium-term perspective, is not going to be a problem. So we think that food inflation should, by and large, move in line with the seasonal trends that we have seen in previous cycles when rainfall has been adequate. What we are really watching out for is, the impact of any excessive rainfall since monsoon arrived a little bit early has on the perishable price cycle, because you could see supply damage, you could see a little bit of a incentive not to grow certain types of vegetables, and that can have some impact on cyclical price trends. But overall, we think that food inflation is going to be by and large under check for this particular year. And some mean reversion is expected in the next year, but that is a problem only to be worried about maybe 12 months down the line.
Right, and Rahul, the new CPI series is expected to be published from the first quarter of 2026. Help us understand what changes do you expect?
Yeah, I think the impact of the new series is likely to kind of, dampen the impact of food inflation at the margin, and, core inflation is likely to become a little bit bigger. What I am personally expecting is that it will probably reduce the volatility of headline inflation at the margin, but it may not necessarily lower the average, inflation levels that we have seen, mainly because as, India's per capita incomes are growing, there's greater consumption of services and durable goods. They tend to be less volatile in prices, but, their rate of inflation also tends to be a lot more sticky. So from my sense is that it will actually dampen the volatility that we typically see in headline inflation, either from a sequential or from a base effect standpoint, but it may not necessarily lower the rate of inflation, right? So it may not have a huge impact as far as policy deliberations are concerned, but it might become a little bit more easier, to forecast month-to-month gyrations, which typically right now are very, very subjective to, food price changes, which tend to have a disproportionate impact in the way inflation forecasts are done.
Okay, Rahul, appreciate that point, and thanks so much for joining us on the show with your estimates of what the CPI print could look like later today. Overall, the street is expecting 3%, so let's see where this number actually ends up coming. We'll be getting